Hi, it's Steve O here from Signal Center Acuity, and it's July the 25th. Welcome to our market alerts on sterling against US dollar. We're going to take a look at the technical levels, drilling down from the weekly chart down to the 4-hour time frame, and then we're going to also take a look at the Acuity market alerts as well to give you a little bit more analysis from a new sentiment perspective. So let's dive down into the detail now. We'll start, this is a market I looked at this morning, and interesting move last week. Obviously there's a lot going on across the globe at the moment, specifically as well in the UK, where the leadership a battle has started for the Tory party, and quite a positive reaction really overall last week. A nice bullish candle to stall this downtrend that we've seen. Price action has been down to 117.60 over the last couple of weeks. We saw the market close around about the 120, the figure level. And this week we've got off to a really nice positive start. So that's it. On the weekly chart, we're looking at maybe the signs of a short-term bottom in place. Now on the daily chart, this was a really interesting price action that we've seen. It's an inverse head and shoulders, or the potential for an inverse head and shoulders formation, and we've seen a little bit of follow through on today's candle already this morning, and if we manage to hold price action around about the levels we're trading now, around about 120.60 or above there, or close above there, then this will confirm this inverse head and shoulders formation. Also significantly, we've broken above the 21-day moving average, and a close above there will also be potentially positive. So this could be the starting of a short-term bottom in the market. Now let's take a look at the 4-hour chart and see where we're getting here. We've got the Ichimoku cloud on the 4-hour chart, obviously been in a downtrend since really 28th of June, so over a month now, or just coming up to a month, and price action broke back through this after we posted this 117.60 low, reacted higher, got up to just above the 120 level, corrected low and found support at the cloud now, and now projecting higher. So if we go back to this inverse head and shoulders formation, if we do manage to get a stall in the market here, we can provide a measured move target for this of a potential to move back up to 123.40. That's the real technical levels that we're looking at the moment. So let's take a look and have a look at what the new sentiment chart is showing us. So this is the Acuity platform. We can see new sentiment in blue. This is a monthly chart. We can see price has moved down, new sentiment really leading the way down, but we have seen a bit of a crossover here over the last 2 weeks, and we've seen new sentiment really picking up from a low of minus 0.31, and we're trading now at minus 0.15. So we've halved that level that we got down to on the 9th of July. And we can see the market alerts. The last one we had out was 9 days ago. Daily new sentiment moving higher, and in 50% of the last 10 currencies, price has risen within 3 days. That was when we were here. Price did manage to move higher, and it's moved significantly higher this morning, as we say, really being dragged higher by this positive new sentiment we're seeing on sterling dollar on cable. So that really sort of lines up with what we're seeing on the technical side of things, and really looking at the candlesticks as well. They're all rejecting these dips that we're getting, quite aggressive sell-offs and dips, but buyers seem to be really sort of like carving the way out for this bottom to continue. A little look at the hourly chart, one trade idea that we looked at early this morning, and that has already played out and hit the target really nicely. Nice 3-to-1 risk reward strategy when we were looking to buy around about these levels after we've reacted nicely off the hourly Ichimoku cloud support. So again, going back to the weekly chart, obviously this downtrend has been in play for quite a while now. Really, if we go back to the end of May, June and July, we've had 2 months and we've seen prices move significantly lower. Let's get a little bit of a measurement on that. We have seen a 17.5% sell-off, so really are due a correction. Now, if we bring Fibonacci into it and we do get this bottom in place, we can see that the first real level of resistance would be a pullback towards the 38.2% Fibonacci. That comes in at 127.11. So there are a number of levels to really look at on the top side if this correction does continue into the rest of the week. Okay, thanks very much for joining us, and hopefully see you soon.